Welcome back to Acceleron Learning and our discussion on credit score components. There are specific things that impact a credit score, and most of them are under our control. Number one, payment history is a huge factor. Late payments on mortgages, car loans, and credit cards negatively impact the score, so make every effort to pay those bills on time. 2. Though you must use credit to have a credit score, also know that how much credit you use or credit utilization is a part of the scoring mix. The higher the ratio of outstanding balances to total available credit limit, the lower the credit score. Paying down a balance or increasing your credit limit improves the score. Using the maximum limit on credit cards or other revolving debt, such as a home equity line, lowers the score. Closing an existing account, which reduces your total available outstanding credit limit, may negatively impact the score. And number 3, your credit history duration, or how long you have had that credit, is also part of the scoring mix. Being a first-time borrower can be frustrating. First-time borrowers can find themselves also being denied credit because they never even had credit. Surprisingly, earlier repayment of a loan may not be good for your credit score, as your availability, ratio, and length of credit may both be negatively impacted. Remember, though, to let common sense be your guide. Keeping unnecessary accounts open or not paying off a note early out of concern for the impact of your credit score may not be in your best financial interest. Your credit score is an important financial management tool, but it's not the only one. The lesser components of a credit score are the type of credit utilized and recent applications for credit. Lenders like to see a mix of credit arrangements such as credit cards, secured loans, and unsecured loans in order to get a more complete picture of a customer's credit behavior. So why would they do this? Well, lenders know that the incentive to pay secured debt is high. A missed car payment can mean no more car, so borrowers will usually pay a car payment. What a lender also likes to see is a customer paying in time without the incentive, meaning borrowers who pay because they understand the responsibility to pay according to agreed terms, not because they fear losing a valued asset. Recent applications for credit would include inquiries for mortgages and automobile loans. If these are not excessive, their impact on your credit score will be neutral, since it is not uncommon to shop for credit when making a large purchase. Excessive applications can be a red flag to lenders because of the risk that a borrower may use all the credit and then be unable to pay it back. And inquiries by employers or checking your own credit score have no impact on your credit score. These are not the sort of inquiries that lead to extension of more credit, so there is no risk to potential lenders. Activities that have a major impact on your credit score are judgments and liens. Judgments occur when a case regarding debt goes to court and the judge enters an order for payment. A lien may occur after the judgment is perfected by notice to the debtor, if the creditor requests rights to certain property that has enough value to satisfy the judgment. Why do future creditors care about past judgments? 2 reasons. First, the judgment must be paid before new creditors will be paid. And second, a judgment may cause a new creditor to doubt the borrower's willingness to pay any creditors, let alone new ones. Even with the best of intentions, sometimes our credit scores will drop. Events both within and outside of our control can cause a credit score to drop, such as a loss of employment, illness, or a catastrophe. But, as we've said before, credit scores are fluid. They change with the times, just like we do. Step 1 in rebuilding your credit is negotiating with your creditors. If you have financial problems, call them and tell them. Often a creditor will offer a grace period or reduced payment terms. Since not paying as agreed can hurt your score, try to reach an agreement with your creditors as early in the crisis as possible. Remember though, you're just one of many customers, so it's best to get any new agreement in writing. And ask how the new agreement will be reported to the agencies. Though you may not be able to change this, it's still best to know beforehand. Step 2 in rebuilding your credit is verification of your debts. Does the company you owe still exist? Has the company merged recently? If the debt cannot be verified, it must be removed from your record. Step 3 in rebuilding your credit is paying off balances. Since what creditors want is their money back, you'll see a quicker improvement in your scores just from paying off credit cards. An added bonus is that the credit card limit remains intact, thereby improving your debt utilization ratio. Paying off term loans, such as mortgages, car loans, and student loans, do not have as large of an impact as paying down unsecured debt. So why is this? Well, because once a term note is repaid, the loan limit is removed from your debt utilization ratio. However, the loan will show as paid. In circumstances when credit has been severely damaged, a secured credit card may be the best way to bounce back. A creditor will be willing to issue a credit card to you if you can match the credit limit with a bank deposit in the same amount. The limit on the card is typically equal to the amount of money deposited in a bank account as collateral for the card. Don't worry. As long as you pay the monthly payments on time and you continue to develop a credit history, your score and your limit will begin to rise once again. There may be other steps on the way to credit redemption. For instance, a credit union may be more likely than traditional banks to consider alternative credit evaluation methods instead of relying only on FICO scores. Plus, credit unions may offer free credit counseling, and many credit unions offer products specifically designed for clients with poor credit. Or, direct input from the consumer can also help. For example, credit reporting agencies will allow consumers to add notes to their credit records. For added convenience, you may add your note of explanation to your record through their websites. Though this may be more beneficial to potential employers than lenders, it's a smart move if a circumstance beyond your control affects your reports. And finally, alternative verification may be the only recourse for individuals without credit. But it could be costly, and if the lender is only willing to consider the scores of the 3 credit reporting agencies, then a request for alternative verification procedures could be fruitless. Luckily, some lenders are willing to expand their criteria to include items like rental histories, so it is always in your best interest to ask. The most important thing to remember is that a credit score is not written in stone. It can and will change, and you can help change it. What about the experts? There are companies that specialize in credit repair. Caution though, many credit repair offers are scams. The companies will dispute all of your accounts, not just the questionable ones. This will require validation of all of your debts. Though the disputes may have the impact of temporarily improving your score and may uncover a debt that cannot be verified and must be removed. Keep in mind that once a debt is validated, it will reappear on your credit report, causing your scores to drop once again. Even worse, the fees are relatively high and could be better spent paying down your debt. So, save the fees. You can do everything they do yourself by writing letters and knowing your credit history. But what about alternative credit cards? Credit cards designed for poor credit customers often have high sign-up and annual fees and high interest rates. So these should be used only as a last resort, or perhaps more accurately, as a starting point if credit must be completely rebuilt. Switch to a lower rate card as soon as possible. Here's a credit planning tip. It may not be best to have all of your bank, credit, and loan accounts at one financial institution. The bank may retain the right of rescission, which is the right to attach and remove funds from your accounts if you become delinquent on a loan. Your credit score should be an accurate reflection of your credit worthiness at any given point in time. Any money spent on improving your credit score is best spent paying off your debts, rather than paying someone else to analyze your debts. Let's recap. Your credit score is the numerical expression of the statistical analysis of your credit behavior and history. Lenders use this score to determine the likelihood that you will 1. Repay a loan in full, 2. Not become more than 90 days past due in your payments, and 3. Not change your repayment tendencies within the next 24 months. Credit scores range from 300 to 850, and the higher the score, the better. The tool used to develop a credit score is the FICO scoring model, which is a weighted mix of your payment history, credit utilization, and credit history duration, as well as the credit types utilized and any recent applications for credit. Credit. You can't live without it, but you can and should manage your credit closely. Enter into credit arrangements only if you are confident of your ability to repay on a timely basis. Even with a high-paying job, if you are attempting to obtain credit for the very first time, you may be required to have a parent, relative, or a spouse co-sign a credit application if you have no credit history of your own. Repeated inquiries into your credit history can lower your credit score, so ignore those tempting offers for unsolicited credit cards. Pay attention to your credit accounts and check your credit history report at least once per year, especially if you are considering a large purchase. You'll want to correct any errors before applying for credit, not after you've been rejected. Don't be afraid to demand accuracy. It is your right as a consumer. If you expect financial difficulties in the future, contact your creditors and make arrangements before they contact you. This will lessen any adverse impact on your credit score. Remember that a contract to pay is a contract to pay, and make every effort to honor that contract. If you do so, credit history should not be a problem for you. And that's what you need to know about credit score components. Acceleron Learning. Life experience accelerated.